Here's a summary of the Caesars Entertainment Incorporated, CZR, 2026 first quarter earnings conference call, focusing on key financial metrics, future outlook, risks, highlights, lowlights, and important statements from the CEO and CFO. CZR 2026 first quarter earnings call summary introduction and overall performance. Caesars Entertainment reported solid results for the first quarter of 2026. Consolidated net revenues reached $2.9 billion, a 3% increase year-over-year. Adjusted EBITDA was $887 million, a slight improvement of $3 million from the prior year. Key financial metrics and segment performance. Las Vegas segment, revenue, flat year-over-year. Adjusted EBITDA, $426 million, down slightly from $433 million in the prior year. Highlights. Significant sequential improvement in hospitality trends, with 95.3% occupancy and 1% ADR growth. This marks a strong rebound from the second half of 2025. Leisure trends are still down year-over-year, but improving sequentially. New renovations at Caesars Palace are receiving positive guest feedback. Lowlights. Leisure trends still lag behind the prior year. Future outlook. Management forecasts continued sequential improvement in operating trends driven by group and convention mix, and stabilizing leisure trends for the remainder of 2026. Regional segment, net revenue, $1.4 billion, a 3% increase year-over-year. Adjusted EBITDA, $435 million, down $5 million from the prior year. This decrease is primarily due to the absence of the Super Bowl benefit in New Orleans from the previous year. Excluding this, the segment showed improved EBITDA. Highlights. Successful acquisition of Caesars Windsor on March 3rd, adding to the portfolio. Opening of Harrah's Oklahoma on April 9th, expanding the Caesars Rewards network. The targeted marketing reinvestment strategy is yielding positive results, driving increases in rate play. The $200 million Tahoe Master Plan renovation is scheduled for completion this month, marking the end of major regional CapEx projects since the 2020 merger, with over $3 billion invested in the regional portfolio over 5 years. Lowlights. Year-over-year EBITDA decline due to the Super Bowl lapping. Future outlook. Expectation to benefit from group mix in arenas, the inclusion of Caesars Windsor, completion of the Tahoe renovation, hosting World Cup events, and continued ROI on marketing reinvestments. Digital segment, net revenue, $374 million, a record for Q1. Adjusted EBITDA, $69 million, a record for Q1. Highlights. Strong flow-through of over 66%, with EBITDA margins expanding 566 basis points to 18.4%. Sports revenue up 9%, with hold increasing significantly. iCasino delivered 18% net revenue growth driven by volume and active users. Record Q1 revenues and EBITDA. Universal Wallet and Player Management System is now live in 27 jurisdictions. Lowlights. Total sports volume declined 3% and mobile sports volume declined 1%, though offset by hold. Future outlook. Management is confident in the digital business's ability to achieve 20% top-line revenue growth with 50% flow-through to EBITDA, remaining on track for long-term financial goals. Significant partnership expenses are expected to roll off in the latter half of 2026 and early 2027, benefiting EBITDA. Management's forecasts and future outlook. Las Vegas. Continued sequential improvement expected, driven by group and convention business and stabilizing leisure trends. Regionals. Expected to benefit from recent investments, property renovations, and event hosting. Digital. On track for long-term financial goals, with projected 20% revenue growth and 50% EBITDA flow-through. expected benefits from expiring partnership expenses. Overall, management expects strong free cash flow for the remainder of 2026 due to operating momentum, lower cash interest expense, and reduced CapEx. The company is entering a free cash flow harvesting stage. Significant risk factors. Las Vegas dependency. The Las Vegas market's performance is still heavily influenced by the presence of significant events and groups, with softer periods. When these are absent, consumer spending. While resilient, the regional consumer could be impacted by sustained elevated gas prices, although the company notes this has not historically been a significant factor for their core customer. Competition. Increased competition, particularly in the high-end Las Vegas market, is anticipated with new property openings like Hard Rock. Regulatory environment. The iGaming landscape remains unpredictable, with the potential for legalization in new states, but also the risk of increased taxes or per-bet taxes. Lease coverage. The Vici lease coverage issues were mentioned as an ongoing topic, though no specific updates were provided beyond stating that the companies are aware of the situation. Highlights of the quarter. Record Q1 revenues and EBITDA in the digital segment. Significant sequential improvement in Las Vegas hospitality trends. Successful acquisition of Caesars Windsor. Completion of major regional CapEx projects is nearing, transitioning to a cash harvest phase. Strong performance of the Caesars Rewards database as a customer acquisition tool for digital businesses. Lowlights of the quarter. Year-over-year adjusted EBITDA decline in the Las Vegas and regional segments, largely due to specific event comparisons. Super Bowl and regionals. Leisure trends in Las Vegas still not fully recovered to prior year levels, though improving sequentially. Most important statements from management. Tom Reeg, CO. Vegas is obviously in a much healthier spot than it was in the middle of last year. Heading into the summer, it's still a tale of a very, very strong market when big events and groups are in town and softness when they aren't. The consumer in general, but particularly the regional consumer, has been remarkably resilient through the noise that we've seen in the last couple of months. With the completion of our capital cycle, we're in a free cash flow harvesting stage now. We're looking at the returns we can get through buying our stock. There's obviously a free cash flow yield associated with that. As free cash flow comes in, we decide which is the most attractive use of that cash flow. Regarding new Las Vegas developments like Hard Rock, we're a little more optimistic that you'll get some of what you and I saw back in the day where a new property opens and expands, the market visitation goes up. It's not just cutting up the pie a little smaller. I think they can grow the pie a bit. Anthony Carano, President and COO. Caesars delivered solid results for the first quarter of 2026, as consolidated net revenues of $2.9 billion increased $77 million, or 3% year-over-year. Highlights for the quarter include continued sequential improvements in operating trends in Las Vegas, revenue and EBITDA growth in the regional segment, and record Q1 revenues and EBITDA in our digital segment. For the remainder of 2026, we continue to forecast sequential improvement in Las Vegas operating trends driven by group and convention mix and stabilizing leisure trends. Our regional portfolio is positioned to benefit from these investments moving forward. Brett Yunker, CFO. We expect to deliver strong free cash flow in 2026 during the balance of the year as a result of continued operating momentum, lower cash interest expense, and lower CapEx. We want our leverage to be sub 5x on a lease-adjusted basis. Eric Hession, President, Caesars Sports and Online. Caesars Digital delivered record first quarter net revenue and adjusted EBITDA of $374 million and $69 million, respectively. We continue to see a business capable of achieving 20% top-line revenue growth with 50% flow-through to EBITDA, which keeps us on track to achieve our long-term financial goals. This summary provides a detailed overview of Caesars Entertainment's first quarter 2026 performance, strategic priorities, and outlook.